me a second. There we go.
Yeah, perfect. We can see that.
Thanks, Joshua. That's perfect.
Okay, what I'll do now is I'll just hand control over to you. I'll just turn my camera and mic off, and I'll jump back on about 15 minutes before the end, for the Q&A side of things.
Perfect. Thanks, Joshua. So ready to go, yeah?
Yep.
Yep, ready to go.
Thank you to Joshua for inviting me to talk today. I think we all agree he's doing an amazing job, and I'd like us all to sort of show his support by continuing to donate to the charity. Roughly about an hour to talk through SSAS. What we're going to do today is introduce an exclusive offer of a discounted SSAS setup with quite a significant donation to charity for each setup that we take on. Then our tech team are going to be providing a live demonstration. Gavin's on the call as well. It's a live demonstration of our new online SaaS portal, so it's our technology. Any questions, let us know, and we'll do our best to cover them. We do have limited time. If we don't manage to cover them, my email's on the slide there, so please just send me an email, and I'll get those questions covered. We'll just move forward. So we're who are we? We're a SSAS scheme administrator. We administer 555 small self-administered schemes, and that number is going up on a daily basis, with now probably about 900 to 1,000 member trustees. We have been going a considerable amount of time, and we've built up our SSAS administration book over a good number of years. Most of our clients are traditionally own and managed businesses, SMEs, where they've used their SSAS pension to help them grow their business. We're seeing quite a large amount of interest from property fraternity in relation to SSAS, especially over the last sort of 2 years, and we can talk a bit more about that as we move through. Just importantly, we're not traditionally, we're not a SSAS trustee, we're a scheme administrator. We do offer a trustee service if it's required, but it will be limited to the just the running of the SSAS pension scheme bank account. It wouldn't be limited. It wouldn't be in relation to the due diligence around the investments. We made this decision quite a few years back, when the business was first started, even before I was involved. And that was because we feel that it'd be impossible for us as a SSAS trustee on every scheme to carry out due diligence on every single deal that was a property deal or loan back that was put in front of us. And ultimately, it's the trustee's responsibility to provide, to seek to obtain due diligence and make sure the deal is right for them. We decided that it would be better if the member trustee carried out that due diligence. That's where we are. This tells you what a SSAS is. Believe it or not, small self-administered scheme is a pension scheme. It's been around since 1973, since the 1973 Finance Act. Effectively, what you've got is you've got a stripped down pension scheme for limited company directors. There's no insurance company involved. You've got your limited company, which is known as a sponsor. You've got a set of trustee, a set of scheme rules, and you invite members in, and they're usually the directors of the business, and you then delegate the administration tasks within the SSAS to other people to help you run it. We see a lot of people get tied up in worrying about running the small self-administered scheme. For instance, traditionally we charge £900 a year to run a small self-administered scheme for one member. We encourage all our member trustees to delegate as much of the administration tasks as you can to us, and we'll for £900 as a property developer or a business owner, you could be getting on with other things, and we can scale up so that we can manage to run your SSAS for a £900 a year fee. So it's a case of you, of the property developer, business owner, getting on with their business, and please, don't worry too much about administering your SSAS. Delegate the administration. It'll always be the member trustee it'll always be the trustee's responsibility. So obviously make sure you do your due diligence as well on any deals. But the administration is just delegate it. Don't lose sleep over how to administer a SSAS if it's too complicated. Eventually the penny would drop, but it does take a while to fully understand the mechanism. Actual reasons for considering a SSAS. This is one of my favourites. It literally is rocket fuel for your business. As I say, most of our clients on our existing SSAS administration book are owner-managed business that we've had on our books for a good number of years. Traditionally, family businesses, children are in that business, but they are trading businesses. The children are now sort of running the business, and the parents are thinking about retirement. So we saw about 18 months ago, 2 years ago, a real sort of peak in interest in SSAS, and that was from the property market, mainly led by Facebook sites like SSAS Alliance and all the meetings that were happening around the country. A lot of property people were looking at their final salary pension schemes, realising that they had considerable amounts of money in those funds, in those pension schemes, and were transferring them out into small self-administered schemes. So they had quite a bit of a steep learning curve. Firstly, they were trying to educate themselves on property, and secondly, they were trying to educate themselves on small self-administered schemes and how they work. So I think all the people who are using the SSASs have realised how beneficial that small self-administered scheme is to them on their property journey, and we'll explain why, what a SSAS can do for you as a trading limited company, or if you have an investment company which is property related. So hopefully we're going to share our knowledge today, help the existing trustees understand where their SSAS can do for them and their company. And also for you developers out there who want to approach SSAS trustees for funds, it's really important to understand how a SSAS works, so you can manage your expectations and approach the client with a deal. What I've seen over the last sort of 18 months is a lot of developers approaching SSAS trustees, probably not understanding what the SSAS trustee is looking to try and achieve, and what the developer should be understanding is that the small self-administered scheme is designed to provide relevant retirement benefits. That's the first and foremost thing that you should keep keep note of, simply because HMRC have provided tax relief on the contributions into the small self-administered scheme, and they want to make sure that people aren't SSAS members, pension scheme members, don't take too much risk, because the HMRC would obviously want to receive the tax revenue when people retire. They don't want that money being lost. So it's important to approach SSAS trustee members, attend the meetings, Zoom meetings now, of course, or if we go back to when we go back to physical meetings, and build up an amount of trust with the member trustee, and talk to them about your project. It won't happen overnight, and make sure that as a SSAS trustee that you always do carry out due diligence on the developer. Find out about the person behind the development, meet him, go for a coffee, try and understand, get to know him, understand what happens when things go wrong. What remedies is he put in place when things don't go quite right. This is your money if you're a SSAS member trustee, and you should be making prudent investment decisions, and that means checking out and the person who you're loaning money to. So these are things that a small self-administered can do for you and your company. So I'll go through them one by one. So you've got purchase your own premises. So if you purchase your own premises within a small self-administered scheme, it's got to be a commercial premises, of course. The rent is tax-free if it's purchased within the pension scheme. Also, the SSAS can borrow money to buy the property up to 50% of the assets of the pension scheme. There's no capital gains tax within the small self-administered scheme, and also the pot is protected against inheritance tax. So it's a good way to build your assets within the pension scheme and ensure that it's nicely protected against those taxes. Again, no capital gains tax on disposal. Full access to your pension assets age 55, which is pretty much the same as any pension scheme. Post-pension freedoms. Watch the tax when you're if you do decide to draw down. Things are sort of turning themselves on the head, really. If you think about sort of pensions, people were getting to the age of 55, 65 and automatically just drawing their pension fund. Now that the pension is really efficient for inheritance tax, then maybe people should be considering looking at some of their other assets to draw their taxable assets that form part of their inheritance tax estate. People should be considering spending money from that part of their estate and retaining the assets within the pension scheme to pass down as a legacy. We had a client who was making considerable withdrawals because he always had done. I sat down, had a trustee meeting with him, and he'd amassed 90,000 in his bank account, which he didn't actually need, which could have stayed in his pension fund. Fact of the matter is, if anything would have happened to him, then he was already over the inheritance tax limits. 40% of that 90,000 would have gone to inheritance tax. So as soon as I shared that information with him, he switched his income off because he simply didn't need it, and he could draw it from other assets that he had, property assets. As I said before, most of our companies are trading companies. The interest in property people into SSAS is a relatively new thing. But if you're a trading company, a director can contribute to £120,000. He can carry forward his unused allowance from previous years. So if you've got a few directors, obviously you can offset quite a bit of corporation tax. So it's £120,000 carry forward, and that would come straight off your balance sheet and reduce your corporation tax. And unlike a personal contribution, if you made a personal contribution of 120,000, you'd actually have to earn 120,000 in that year to make that contribution, unlike the director's contribution or the company contribution. It's different. So quite a huge benefit. It's a bit more difficult with property companies making a contribution because a property company isn't a trading company, although it may pay corporation tax. But that's a discussion for another time. You can transfer personal business assets into the SSAS, providing the commercial assets within your allowance. So you've got two allowances here. You've got your £40,000 a year, and also you've got to be mindful of capital gains tax allowance. So if you're selling an asset, if you're moving an asset into your pension fund, then obviously there's capital gains tax to be paid. So, but you can transfer it in, the assets in line with your capital gains tax allowance and your personal allowance. So that is possible. Again, take advice, either from us or speak to your accountant. We can work with your accountant on that. But it's bearing in mind that once the asset's in the pension fund, it's then free of capital gains tax, and it moves out of your taxable estate for inheritance tax. Company contributions reduce your corporation tax. We've already said that. A director can make a company can make a contribution up to £500,000 in any 1 year, providing it's got its profits. That works in a way where obviously you've got your normal limits of 40,000 per director, but the company can make a contribution if it's had an exceptional trading period and he wants to get money off the balance sheet, and the £500,000 or the balance of what's not allocated could be allocated at a further date over a number of years. That works really well if you've had years where you've made exceptional profit and unlikely to do that again. So the company would just issue a resolution saying that it wanted to make larger contribution this year in light of having an exceptional trading year, and in the future that may not happen, so they're putting money away for that now. Consolidation of pension funds, one admin fee, and you're in control. You're fully in control of your SSAS, as there's no insurance company in there. When you consolidate your pension funds, sometimes you'll have pension funds from years back. You've no idea how their charging structure works. Very implicit charges. You would never get to the bottom of exactly how they work. And some people just leave those pension funds there, and if you think about it, those fees are eating away at your potential. They're providing what's called a reduction in yield, so they're eating away at the potential returns, so they're always worthwhile having a look at. When you transfer them into the SSAS, you've just got one set fee. There's no annual management charge, so it's just an annual administration fee. Again, that's £900 a year for one member, so it can be really effective. Rather than paying lots of different fees with various different pension funds. So if you've got quite a sizable fund and you're only paying £900 a year, it's only a small percentage. A SSAS can loan to its sponsoring employer. The sponsoring employer can receive a loan from the pension fund. So I'm just keeping a track of time. Yeah, make a loan to the pension fund. That loan can be up to 50% of the assets of the pension fund, the SSAS, and it has to take a first charge. A small self-administered scheme has to have a first charge over that asset, and the charge has to be over equal value. We see a lot of. I'm just going to touch briefly on the loan back to the sponsoring employer, where the sponsoring employer is a property company. Where the sponsoring employer is a property company, we're seeing a lot of loan backs to those type of companies. So as in buy-to-lets and maybe a mix of buy-to-lets and commercial. It's important to note that if a loan is made to a property company, an investment company, the pension scheme needs to achieve a first charge. So if you're just starting out and you've only got it's your first property, or you've got to be mindful that that property needs to sit on a balance sheet of that sponsoring employer so that the pension scheme can obtain a charge. You can't use your pension funds to buy that first property and exchange and complete on the same day. The charge has to exist. You just got to be mindful of that. As a trustee, you take the responsibility. I do see it happening where people are exchanging and completing on the same day, and the property is bought into the company that way. We wouldn't advise that, and we feel that we've spoken to our technical team, and we've come to the conclusion that the revenue would incur an unauthorised payment fee charge. So just bearing in mind that when we're looking at the rules around loaning to your property company, the rules are quite generous. I mean, bearing in mind that a small self-administered scheme was generally was created for the owner-managed businesses, for trading companies. It wasn't created for property companies. It's just that the property companies property fraternity have got involved with small self-administered scheme. It fits quite well but that's what it originally wasn't. It wasn't originally designed for that. So you just have to be mindful with some of the guidelines. Guidelines are quite generous, and I just say to people, don't, because they're only guidelines and they need to be interpreted. Don't interpret the guidelines because you think the deal fits. You will get into hot water doing that. SSAS can loan to a third party or your limited company. So we've got all the rules around loaning to your sponsoring employer, and you have to have a first charge, etc. Whereas to loaning to a third party, an unconnected third party, doesn't seem to have a lot of restrictions. You don't need a first charge, strangely enough. But what it comes back to is that as a member trustee, you should make prudent investment decisions. So that sort of really is a caveat on that. So would a first charge be, would a prudent investment decision be to loan to a third party, a developer who's you want to get into his commercial property deal, or you want to loan him money if you didn't have a first charge. So at least a first charge or a second charge. If you can't get a second charge, personal guarantee, well, please bear in mind that that developer could have numerous amounts of personal guarantees out there. So it's always worthwhile to check how many personal guarantees are out there and ask for an asset and statements liability, just so that as a trustee, member trustee, you're making sure that you've carried out your due diligence. And again, if you're the member trustee, get to know the developer, and if you're the developer, please sort of be patient with the investor and try and find out what their requirements are, try and find out about how the SSAS works. Taking an interest in other assets, a small self-administered scheme can actually collaborate with other investors, whether it be cash or other SSAS members if it's a commercial asset. So it can take an interest and have a declaration of trust over that asset. I won't go into too much detail because we just don't have the time. So anybody who wants to talk to me about that can just email me and we'll have a meeting. SSAS is good for succession planning. It is. You got a £1 million lifetime allowance within the SSAS. You can pass your SSAS down to only to one generation. You can't control who. You can control who you nominate as your beneficiary, but you can't control who your beneficiary nominates. You can look at some type of bypass trust. Again, we can discuss that in a bit more depth another time. So just remember your role as a trustee is to invest prudently. If there's no first charge over an asset, consider a second charge. And the very least, a PG with accounts and an asset and liability statement. Look for a track record with the developer. Get to know the developer. You can syndicate the loan and collaborate with other SSAS trustees or individuals. So if you've got a sizable pot, and there's 3 or 4 of you who've got sizable pots, you can leverage the funds up and make it more attractive. These are just talking about death benefits and legacy. What happens if you were to die pre-age 75? There's a bit of tax planning. If you die pre-age 75, the pension scheme would go to your beneficiary, and it would go to them tax-free. If your beneficiary then say was 55 and she died before the age of 75, it would go to their beneficiary tax-free. If the beneficiary died post 75, then their beneficiary will pay tax. It just follows right the way through. Age 75 or over, the beneficiary pays tax at the marginal rate. Just a point to remember, if you've got grandchildren or great-grandchildren, put them down on the nomination of beneficiaries as potential beneficiaries, because you can always use their tax allowance. So if son inherits a pension scheme, or he's a beneficiary, he may be a high rate taxpayer, paying children through university, and to get access to the pension fund means he'll have to pay 40% tax, or tax his marginal rate. So if the grandchildren are on the potential beneficiaries, the trustee can do a bit of tax planning, and the income could be paid to the children, and use their tax allowances, far more efficient. Always make sure you nominate a beneficiary. So any of you who've got pensions out there, check that your nominations are up to date. It's really important. I've got roughly about half an hour here, so Gavin is going to do a demonstration very shortly. One of the things I just want to quickly talk about is we talk to a lot of property developers, a lot of property people, and we talk about pension schemes, how it can help you, the SSAS, how it can help you build your wealth, and that's rocket fuel for your business. But we, if I'm in a meeting, I can guarantee you, if I ask 10 people how many of them have thought where that money's going to go once they die, very few of them have given it any thought. Very few developers or property people have given that any thought. So if you're building your wealth, you should be considering how you're going to pass that down, and in a tax efficient way. There was a meeting last week, well, a couple of weeks ago, and there was at 10 people, only one person in the room had a will, and the whole day was dedicated. They were in a meeting, the whole day was dedicated to building their wealth. Yet only one person had considered how they're going to pass that wealth down. The other 9 people may as well have said, I'm going to let the government write my will, and I will put the government down as one of my beneficiaries. The government are getting really good at taxing generational wealth now. So always start with the end in mind. A good estate plan is always a good thing to have. It's not a cheap thing to do, but it really does sort of put the lid on all your finances, and make sure that it passes down through your bloodline in an effective manner, and generational inheritance tax is catered for. So effectively what happens is your wealth freezes into your generation you're in now, and whilst your future generations can have access to them, your wealth doesn't tumble on top of them, and because eventually your wealth will just keep getting taxed in small bits each time it passes through the generations. So again, I'm an expert in the worlds of trust and estate planning, so any questions, just let me know. Just wanted to announce that we've got an offer available to the first 50 delegates who have a limited company and are looking to set up a SSAS. We will discount your SSAS setup fee by £400. It's usually £900, and also upon a successful registration, Retirement Capital will donate £250 of that fee paid to the NH Property Conference charity. So that's the first 50 small self-administered schemes that are registered. We're also offering free takeovers. So if you're unhappy with your SSAS administrator currently, and you want to move over to our new tech platform before the 30th of May, the takeover is free, and we'll donate £10 for all completed takeovers to the charity. To take advantage of these offers, just email me directly. My email address is there, and just quote reference DN50. And some of you may want to have a chat with us as well before you to consider how your SSAS is going to work best for you. So just want to thank you, and we'll ask questions at the end, and I'll just pass you over to Gavin, who's going to do a demonstration of our new tech. We are sort of revolutionised the SSAS industry, and we have an online platform which is the first of its kind to help you administer your SSAS and improve customer service experience within the SSAS industry. So this is a new thing. We've been working on this for the last 18 months, and it's going through various different phases. We're getting to where we want to be with it, and I'll just hand you over to Gavin. So just bear with me while we have a bit of a swap over. So I'm going to stop sharing. And I think, Gavin, you're going to come on with your live demonstration.
Okay, can we can we see the retirement capital front screen?
Yeah.
You can? Okay, great.
Yeah.
So to give a brief background to the technology, I think most people perhaps either have been in a pension scheme or may have a pension scheme that they're paying into at present. If we take one of the perhaps most common schemes, which is a self-invested personal pension, it's likely that if people have a self-invested personal pension, they may well have it with somebody like Hargreaves Lansdown or AJ Bell, which allows them to trade and buy and sell stocks and shares in the markets. We built this functionality into the platform. We plugged into interactive investors for that. And in addition, we plugged in a number of our other investment applications. Parts which I'll look at today are specifically those geared around property lending, property investing, property buying, and explaining how this could potentially work. So we're going to log into the test environment. So the test environment basically is an example of how a typical SaaS client might decide to invest their pension fund. The first thing that you'll see is obviously a pie chart, which will contain uses of property, your cash, any lending that you've got out, perhaps money you might have deposit, and if you're interested in investing into crowdfunding through of course regulated platforms, we provide that access as well. In this particular case, we've got a chap called Alex. He's received his activation code, and the first thing that we all want to know is how much is in my pension fund, and what will I receive at retirement date. So the aggregate value of all his investments together are 390,000, and at his selected retirement date is forecast to be 442,000. And as you can see there, he's able to receive a lump sum together with a pension drawdown income of just under 26,500 a year. Now, there are of course always scenarios whereby one is trying to ascertain to find out how much one needs to contribute in order to generate a desired level of income. So in this chap's case, he wants to give up by 67. He's looking for an income of 35,000 a year, and he would need to pay in an excess of 6,000 a year based on this projection. We also have a lifetime allowance. So the lifetime allowance is presently just over 1,073,000, and we track your lifetime allowance to ensure that as you're building your pension fund, you don't reach a point early whereby you're building up too much money within your pension fund. The dashboard on the right-hand side allows you to do different things. It allows you to set up a contribution rate. It allows you to invest, which I'll come on to, manage and access a breakdown of your existing holdings. If you are over 55, you can set up a withdrawal of pension benefits from your scheme. One of the functions that we'll have a quick look at is a pension transfer function. This is where you've got pensions from elsewhere and you would like to transfer those pensions into your self-administered scheme. Beneficiaries, as Dave said a little earlier on, you can make alterations to your pension beneficiaries in your online dashboard, and your document center contains all your relevant information, everything from details of your leases in respect of property to pension scheme lending, and also your scheme paperwork as well. One of the things that we've also created within the document center is a thing called My Docs. What My Docs allows you to do is upload documents which are perhaps pertinent to you, such as your will or other relevant personal information. If we look at the transfer functionality first, and we were to set up a pension transfer, most of the time it's a fairly straightforward process. The first step that you're looking to do is you're looking to basically say, okay, what type of pension am I bringing across? If you're looking at most types of pension transfers involved where you have investments, you're looking at transferring the cash into your pension bank account, and you're looking to use the cash in that bank account to perhaps invest into a property deal. Pension transfers through us, we do not charge for, because we've set it up through technology. So the first question you will need to know is the pension in payment at the moment? Who is it with? If we were to say that it was with Aviva, and if you're able to provide the latest valuation of that fund, let's just say the pension fund is worth £35,000. Any documentation that you have can be uploaded onto the system, which is going to be very, very helpful when you come to the next pension transfer stage. You click on next, and in step 3, we ask for 3 pieces of information. We recommend always that you obtain pension transfer advice. And the reason for that, because you need to ascertain whether in moving money from where it is into a self-administered scheme, that it's the right call for you to do so, and you're certainly not losing certain guarantees or benefits in the pension scheme that you have. So you can either choose for a quotation for financial advice, and that goes into our partner network, who will then provide you, based on the information that you provide, a cost for pension advice to make the transfer. If you have a pension transfer, a financial advisor who acts on your behalf, you provide us with certain key information, and then we get in touch with them and go through the pension transfer process. You can, of course, always decide to undertake an execution-only pension transfer. If you've got benefits in a final salary scheme, you are not able to exercise this choice. So it's only where you've built money up in what we call money purchase, such as a SIP or an employer's money purchase pension scheme. On the basis that you decide, you know what, I don't want to exercise pension transfer advice, then we set up the pension transfer based on the documentation that you have uploaded, and we issue you with pre-prepared pension transfer paperwork, which you then submit to your seeding scheme. If you decide to take our recommended route of taking financial advice, then based on the documentation and information that's provided, we then send that into our partnership network, and you will receive some quotations, indicative quotations for a pension transfer in. Once a pension has been transferred into your self-administered scheme account, you receive a notification of that. And in this case, let's just assume that you've just received a pension transfer in, and you have £100,000 in your pension scheme cash account. We plug in with the banks your pension scheme cash account, and as part of the sort of next stage development of the applications, you'll be able to see online statements. Presently, your online statements will be in paper format for you to download in your dashboard account. So these are the 6 areas where people use their self-administered pension scheme. They use it for lending, they use it for property, crowdfunding, or if you're not looking to tie money up, to access, for example, cash deposits or the stock market. Let's just touch on that. You wanted to put your money onto cash deposit, and you wanted to say, you know what, I'm looking to put in £30,000 into on cash deposit over the next 12 months, say 2 years. Let's find out who's providing the best interest rate in the market. So the best interest rate in the market on 2 years in the test environment is 1.95% with United Trust Bank. If you wanted to then secure that rate, you can click this button here, and then that creates an instruction into our administration support team. You would receive the paperwork and documents for you to then agree to that deposit rate deal, and the cash the cash deposit will then appear in your holdings account together with your other investments, and it will be broken down as something like this. In this example, an investment was made on the 1st of April 2020 over a 2-year period with United Trust Bank, and the most recent value is £10,000 because the interest is added on an annual basis. The other functionality that you would also probably use if you're engaged in property is pension scheme lending. So if you're lending money out from your pension scheme, you want to know what the current status of your pension scheme loans. Any loan repayments go into your pension scheme account and is updated on your dashboard. So in this scenario, we have a loan for £70,000. No capital or interest payments have been made so far. It was invested on the 26th of January 2020. It's set an interest rate of 3%, and it's going to be repayable annually. And it's a floating charge. In this case, it's a floating charge against the business, and it's due to be paid back in 2025. Once repayments start being made in, it's updated in your dashboard account. And of course, the balance outstanding section that you see here then starts to decline. So let's say we wanted to add a further loan. So if we want to add, in this case, we say we want to do a further loan of £35,000, and we want to undertake a term for, say, 3 years. So you want to do it quarterly, and we want to do an interest rate of 4%. We're providing a charge against the business assets. That will provide us with the repayment amount. We feel that, well, £3,100 a quarter seems to be a bit steep from a cash flow point of view, so I want to move that to a yearly basis, and I want to extend the loan term over 4 years. That, of course, adjusts your loan repayment amount. That then generates a loan application. The loan application is then goes through certain background checks against the company to validate the security, and we also issue you with a confirmation of the loan amount and loan repayment details. Once that has been agreed, it's all issued electronically through DocuSign and signed on behalf of the company, as well as you as trustees of the pension scheme. Once it's activated, you receive a very short phone call to confirm the amount, and the cash is then debited from the trustees pension scheme bank account into the company account. The other aspect is, for example, let's have a look at where are we? Crowdfunding. So crowdfunding is quite popular. So if you do not want to buy a commercial premises or invest with a private developer, you can, of course, invest, assuming that you're a qualifying investor, invest into crowdfunding. We plugged into Crowd With Us London, and Crowd With Us London, as you can see here, we've been pulled the latest deals from CWU relating to investing. In this case, if we were to choose, say, this one here, very randomly. It gives us a snapshot of what the investments are, and you can then sign up to the deal by being redirected to the CWU website. Once you've redirected to the CWU website, any investment that you then make through CWU, which is debited from your pension scheme account, will sit in here. So in this case, the customer's just invested £10,000 on the 27th of January 2020 with CWU. The interest rate that we specified for the purpose of the test is 8%. It's on a first charge, and this is a one-person scheme. So in this case, your personal stake is £10,000. If there's others who are in the pension scheme with you and you're investing, there's two people, then we break the investment down depending on how many are in the how many of you are in the small self-administered scheme. So if there's two of you and the pension scheme invested £10,000 and your share was say £5,000, you would see that broken down in this section here. The other area that you're perhaps interested in would be stocks and shares. So stocks and shares, we don't charge for clients to open or access a pension scheme stocks and shares trading account. You can access this through the platform, and your investments are then aggregated with your existing holdings. You go through this, actually would take you into the live section, open a share trading account. In this scenario, let's access your demo account. And in here, we can see we've got a portfolio of different shares together with the increase in that portfolio of 6% over the over the period. And it's also broken down into dollar level as well. That portfolio is then added into your holdings account with your dashboard, and that allows you to invest directly into the stock market through your small self-administered scheme. In the other area that you may be interested in is Investment Manager. So Investment Manager allows you to plug in to an investment manager if you want somebody to manage your portfolio. Now you can use any one of a combination of these types of these apps. The ones that we find which are most popular are people looking to get the best rate of cash and deposit, a little bit of money in the stock market, bear in mind where it's gone to, and also the loan and property section as well. So in property section, we provide a breakdown of the amount of money that you have within your property, and any pension and any arrears in respect of rents are actually held there. You can undertake a search. So at the moment we've plugged into Zoopla, and let's make that a bit bigger. You can undertake a search through Zoopla in commercial property, and then add those properties onto your dashboard account. In wave 2 in the autumn, we are launching a property auction section as well, in which we've developed some technology which filters out property qualifying investments for auctions, which you can access as well. And this again is a free service as part of their technology that we're working on at present. So the idea of Retirement Capital is we act as a SSAS administrator for your self-administered scheme. You are able to use our applications if you wish to invest, or if you do not wish to invest, to use our application, that's fine. But we find that in respect of pension scheme administration, the parts that you want to ensure and want to know is my pension scheme tax compliant? What is the value of it? What I'm going to get at the retirement date, and can I access my financial information And historically, if any of you are with another self-administered scheme provider, that has always been a paper-based and at times a very long and frustrating affair. And as a UK first, we've developed this into a financial application. So that's it. I think, Dave, can I hand back to you?
Thank you, Gav. Yeah, so I'll just screen share again and have a look. So, okay, so I've answered some questions online. If anybody else has got any questions, just let me know, and we'll try and get through them in the time that we've got.
Yeah, absolutely. So we've got a couple coming through on YouTube. Let's have a look what we've got. So what does trading company mean in the context of being eligible for opening a SSAS pension?
A small self-administered scheme has to have a sponsoring employer. So there's obviously you've got an investment company, which is possible to be a sponsoring employer. An investment company is usually a property company that holds buy-to-lets. It doesn't actually trade; it just receives rental income. The trading company is a company that manufactures or something along those lines when it actually trades. It's just a definition that we use. So either one, you can sponsor a small self-administered schemes. Where you've got an investment company, you need to consider if you want to make contributions, then obviously we need to discuss that in a bit more further depth.
I think, Joshua, I think it's also worth mentioning that the business can't be a dormant company. It can't have any activity. It must have activity, because if it's not a, there are some instances where there are people who set pension schemes up in the past, which are dormant companies, but this isn't their correct use, and also you won't get a tax certificate from for your pension scheme. So we always request and ensure that the business must be trading, must be engaged in business activities before the scheme receives its tax certificate.
Yeah, perfect. So in terms of companies that have got a group structure, can the sponsoring company of the pension, can that be a subsidiary, or does it have to follow the shareholding? So would it be the group company or a subsidiary?
No, because so you can have more than one company attached to your pension scheme. It can be a subsidiary. The first or the main test is that it has to have business activity going on. If it's dormant or it has you put £100 worth of trade through it, I mean that doesn't work. There's got to be something going on.
Yeah, perfect. So what's the minimum size of pension pot for it to be transferred to a SSAS?
Usually, you've got to look at sort of what fees that you're going to be paying, because you obviously got to be mindful of the reduction in yield from the fees that you're going to be paying. So our typical annual administration is £900 a year. So you're looking at between 75 and 100,000 as a minimum sort of amount that you should be having a SAS.
You want to keep your expense ratio under 1%. I know there's some providers out there who charge more than that, but you don't want to go above 1% as a scheme expense ratio. And so that's why we recommend that as a sort of threshold figure, as a combination of transfers and contributions.
Yeah, absolutely. Yeah, that makes complete sense. So what else? Can an NHS pension be transferred to SAS?
No.
All right, perfect. So could I use my IT company that is currently active as a sponsoring employer for a SAS? Yeah, it seems like you guys have answered that one.
Yes.
Okay, do you have any more come through? So in terms of the kind of annual compliance, so you say about £900 for you guys. Is there any other work that a trustee would have to do that would cost money? So is that the total running fees for a SAS, or are there hidden costs that would be incurred as well?
Okay, so if there's more than two of you in the pension scheme, you have a statutory fee with the pensions regulator. I think it's about £35 a year. and there's a ICO registration fee, which I think is up for discussion at the moment. But they're but then the other costs will be those that you add on top. For example, you know, if you may have if you've got property held within the pension scheme, you'll have, of course, insurances and all the usual bits and pieces. So you need to add those on top, such as building insurance. And if you're buying, you've got things like solicitors' fees. So so you need to take into account that if you're doing lending or you're buying property, and you will have some legal costs associated with that.
Yeah, perfect. So I think we've got time for one more question. Say I wanted to invest in crowd property via a SSAS, would that be possible under your scheme?
It would
Yes.
be. You'd need to ensure that you're, but you need to be a qualifying investor to do that.
Yeah.
I think
so in terms,
anyway.
yeah. So in terms of setting it up, is it possible to just set it up with initial money to just put fresh capital in, or do you have to transfer an existing pension?
You can set up with obviously you're limited by your contribution amounts. So and then you back down to the question of you've got your fee of £900 a year to run it, and if your first contribution is 40,000 and you've got no pension funds from elsewhere, then it'd probably be more beneficial to start with a SIP, a self-invested personal pension, and then move over to a more self-administered scheme as and when the fund gets to a reasonable size.
Okay, so what would the fees roughly be to set up a SIP?
Well, I think at the moment probably the same. I mean, if you go with somebody like, I'm not that we're recommending it. If you went, say, to Hargreaves Lansdown and you wanted to go into the stock market, then the SIP, there's no establishment fee.
Yep.
Whereas if you were to go to a traditional SIP provider, it's probably the same cost that we're doing, obviously, given the COVID-19 and the NHS issue at the moment with obviously with you guys. So I think the thing that you've got to obviously bear in mind that your logic for going into a self-administered scheme is in order to take advantage of that type of investment approach. If you're looking to just buy some stocks and shares, then there are sort of online things out there in the market that does the job for you, and is going to be more cost advantageous. I think my own opinion on it is that self-administered scheme is ideal for business owners who want to invest just beyond the stock market.
Yeah, absolutely. Definitely agree with that. In terms of one last question, so in terms of serviced accommodation, can that be held in a SSAS?
Dave, shall I answer that? Or
yeah, the simple answer is no, it can't, because it's even though some people view it as being a commercial asset, it's actually classed as a residential asset, so very similar to a HMO. So the answer is no, not this time, no.
All right, perfect. Yeah, that's been really helpful. Incredibly knowledgeable presentation there. A lot of directly kind of implementable information for people. So we've shared the contact details all around the group. So I'm sure a couple of people would definitely look to take that up. But thank you very much, David and Gavin, for your time.
Thank you very much, Joshua. Really appreciate the opportunity to present today. Thank you.
Perfect. Enjoy the rest of your day, guys.
Yeah, same to you.
Yes, bye.